53%. Okay, good morning, everybody. I'd like to welcome you all to the Daily Energy Markets podcast. Great to be here, September the 2nd, our second podcast of the season. Kicking off today, I'm delighted to be joined by Peter Maguire, CEO in Australia of Trading.com, and Narendra Taneja, India's leading energy expert, and Adi Imsirovic, Director of Surrey Clean Energy and Senior Associate at CSIS. Gentlemen, thanks so much for returning and joining us today. Peter, let me start with you for an overview of where you see commodity markets heading as we sort of approach the fourth quarter. Volatility was the name of the game at the start of the year. Would you agree that things calmed down a bit over the summer? And is the trajectory towards the end of the year a little bit more predictable than it has been so far this year?
Well, good morning. Greetings from Sydney. Many different lenses to look through, and I don't know where one starts. I mean, if you let's look at US dollar as the first case. It's down in the best part of 11 or 11.5% since the inauguration of 20 January. So it's capitulated. Secondly, we're looking at interest rate markets and what's happening as far as the Fed, and are we going to see a rate cut this month? Could well happen. Gold at an all-time high, silver at a 14-year high. This is today. Gold, I'm looking at, you're looking at up $44 at 35.60. Tremendous move, what we've seen, probably 34%, I suppose. It'll be close to it, 33% for the year to date. So there's that part of it. And then you're looking at energy prices. They're range bound in a lot of ways, but they seem to be erring more to the downside than the upside. And I think that will possibly continue into the end of Q3. And as everyone's saying, you might have a glut come Q4. So base metal markets industrial metals have been choppy. You've got copper nudging 10,000 Diala, and there might be further move there as far as iron ore prices to the upside, and possibly, take along tin, aluminium and zinc. And then if you're looking at the soft commodities, that's a whole story unto itself as far as soybean production. You're looking at what's happening as far as China and their appetite towards it, pardon the pun, and then the whole momentum. So I think that the commodity sector, it's been dynamic for the first 8 months of the year, and I don't think the last 4 months are going to disappoint at all.
Okay, thanks, Peter, for that overview. Adi, let me go to you and let's talk a bit about oil, because the sentiment has been, at least going forward from the people we've talked to, that we've had this yin and yang of supply and demand really the last 2 years, haven't we? Dominating the headlines. Now the majority seem to think, well, oversupply seems to be the trend as we approach the end of the year. Would you agree with that, given the numbers we're seeing sort of on the water, if you like, and what could change that, if anything?
Right. Well, good morning, Diala. I think, as usual, what's happening with oil, you have two stories. You've got a physical story of, people who count the barrels and look at the front end of the market, and you look at the macro picture and the flat price, which seems to be living its own kind of life, but actually they make a lot of sense to me. Quite a few observers in the market have been saying, well, how come oil is not going down? Because there is such an oversupply. And I think most observers would agree there is going to be a large oversupply in Q4, maybe about 1.5 million barrels, assuming that OPEC don't sort of stop or introduce some further cuts. Now, just to link on to what Peter said, dollar's down over 10%. Oil has not moved. So oil is effectively down in real terms more than 10%. So oil is very weak. Oil is very weak. Fundamentally at the front end, just a quick update. Dated is in contango, actually, at the front end of the market. Spreads are a lot weaker than they were a month ago. West African crude, usually sort of a canary in the mine, have not been selling very well in spite of India coming in and scooping up quite a few barrels on the back of geopolitical situation that I'm sure Narendra will tell us a lot more about. So overall, the market is not looking great. Positives for the oil market are the Middle East refinery turnarounds are going to happen big time, especially in Saudi Arabia, Kuwait, and now we've got also turnarounds in China. So that will tighten up the products market, but and that sort of may help the situation a little bit, but at the same time, let's not forget that it's going to reduce demand for oil.
Demand for crude, of course. Yeah.
And
Okay.
increase supply from Saudi Arabia as they need less oil at home.
Okay.
So
Thanks, Ali.
situation is not great.
It's
Not
not
great.
great, not great. Although yesterday we had Omar Najia on saying, well, oil is weak, as you said, price-wise, on the technical side, and it can only follow those other commodities up, which are way ahead this year, aren't they? So that sort of, I suppose, inflationary sentiment will carry oil up regardless of demand and supply.
Exactly. Yeah, exactly. Sorry, the bottom line is that oil is actually very weak given where gold is, where silver is, where interest rates are, and where the dollar is. So, yeah, it's in a perspective.
Yeah, thanks. Narendra, good morning. We have a
Morning.
lot to catch up on. We've had lots of headlines being made by your leader over the weekend, alongside President Xi and Putin, and Trump calling India's stance a one-sided disaster, the way that you have been meeting and continuing to take Russian crude. Now, where do you put things from India's perspective on that front, continuing to look after itself by the looks of it?
Well, yeah, we have seen a statement by President Trump almost every second day. I mean, he has declared Indian economy is dead, and so many other statements. So I think, but India, we regard United States as a very important partner, a strategic partner, and we make a difference between President Trump and the United States of America. So our relationship with the United States of America is very deep and strategic, and we are working on it. So far, there is no structural damage. And so what we are trying to do right at this stage is to show strategic patience and hope that the 3.5 years will pass soon and the relationship will be back to normal.
Well, that's a long time, though, to wait, isn't it? I mean, in the meantime, how does India strategize with a 50% tariff, albeit that it may not materialize? Clearly, the indications have been that that can change. But is there any concern on the economic front from the tariff?
Well, there are concerns, of course. There's 50% tariff, out of which, as 25% is kind of punishment tariff because we import oil from Russia. And our line is very clear. There are no sanctions by India. Those sanctions by America and Western Europe are unilateral. Those are not United Nations sanctions. You can do whatever, but we don't have any sanctions. We are a sovereign country. We have our own foreign policy. We have our own global vision, and we will continue to do what makes sense to our economy. Our importers, there is no government directive to our refiners. Refiners are free to import oil from wherever they find is better, cheaper, and being offered on better terms. And Russia offers, crude oil on very good terms. So that's why it's no love for Russia. It's economics. So, but President Trump does understand economics. He understands only real estate and the way he looks at the world. So that's a different story altogether. So I think we have no option. On the one hand, continue to push for better relationship, and at the same time, one thing is very clear, as you were referring to those pictures, those optics from the Shanghai SCO summit, and before that, our foreign minister visit to Moscow. We are a big country, home to 1.4 billion people. We have our own vision when it comes to our future. We are well on our way to become a global power in 25 years from now, $25 trillion economy, and so on and so forth. Along the way, if you have that kind of ambition that you want to be a big pole in your own right, there are going to be challenges. So what President Trump is basically, the way we are looking at it is that President Trump does not want India to become a big global power. So that's how we are looking at it.
Okay.
But when it comes to the SCO summit and the optics and all that, I think, China is our neighbor. We have known China for thousands of years. Russia has always been a very good friend, a strategic partner, and we'll continue to pursue. And as long as they can offer us oil on good terms, good economic terms, our refiners are free to buy. If they can't, US can do it tomorrow, or some other country will buy from them. This is as simple as that.
It's economics, as everyone says. Peter, back to you about economy. Let's talk a bit about China. I mean, talking of India, that is seen not yet, but as a long-term consumer of oil. It's certainly going to be sitting in that position more than China is, isn't it? Because of China's sort of electric transition, if you like, which is going quite fast. But what about more immediately, the sentiment around China economy, stimulus coming out of the government there in the second half of the year and more of it maybe to come? How do we see the Chinese sort of demand picture, do you think, ending this year from the indications you're getting there out in Asia?
Well, I've got to say, first off, if you look at the barometer being their stock market, it's back at that SCSI
Yeah.
300, very, very strong compared to where we were a year back. It's now at 44.
And why do you think that's happened? What's spurred that recovery? Is it
Well,
just
I think a
stimulus
couple.
or?
I think first off, fear of missing out. Secondly, it's been very, very strong demand from retail traders, and they're realizing that well, I would say probably that the real estate market is totally tapped out and it's cyclical. I mean, when you've got large overhang as far as property and excess supply, then you're not going to be able to buy for $1 million and sell for 1.3 2 years later and have nice capital growth. People are looking at other alternatives, and I think it's that herd mentality. And the market has performed incredibly well. I'm referring to the stock market. We all understand that there was earlier in the year to have a bazooka style stimulus strategy for internal demand for China was going to be the pathway forward. We did see some negotiations from the PBOC about a month or so ago as far as lending criteria and making the prime rate a little bit cheaper and more accessible and more comfortable for lenders or for borrowers. And so that's a plus. And then the next pathway going forward, they're in a state of, well, I don't think the reality has hit them like India. And you listen to Narendra and his commentary regarding President Trump and the tariff situation. That hasn't been impacted in China domestically yet. It's still a work in progress. They're saying it's going to be October or November until that actually the fabric of it is presented, and that's how it rolls forward. So I think that China could have it could splutter a little bit in Q4. We've just got to see how all of those moving parts more or less meld together. But for 26, they need strong internal demand, how they're going to navigate as far as tariff policy, and they're not going to be able to ship to Cambodia and then ship on and not warehouse that tariff. So this is all going to be, again, it's a game, it's a brinkmanship at the moment between President Trump and Xi and so on. And I think that it'll be very dynamic how it plays out.
As you said, and the ripple effects of those tariffs onto other countries, right? And how they maybe have to put up defensive strategies as a result, not towards the US, but towards their neighbors perhaps as well. Peter, Adi, thanks. Let's go back to you. Let's talk a bit about Ukraine, Russia, because again, we don't see any sort of light at the end of that tunnel, escalating actually military tensions, even overnight, more sort of attacks on Ukraine power. Russia apparently coming under a bit of pressure also, perhaps going forward in terms of getting its oil out if these tensions increase. So any concern there about actual Russian oil not reaching the market if this Ukraine crisis does not come to an end?
Well, there are a lot of concerns regarding Russian oil, not necessarily oil, but it's about the mixture of oil versus products, because all these geopolitical uncertainties and actually, as you rightly said, escalation in the war has left Russia with about 700,000 barrels of refining capacity down. You've got one of the biggest ports of Ust-Luga, which is a products export hub, down at half capacity. So it's if you are in the oil market moving this, whether it's China, India, Singapore, you've got massive uncertainties. You don't know whether there's going to be more oil coming out or more product going to come out, which products are going to come out. For example, Ust-Luga is mainly going to affect naphtha exports. So that's usually used as a blending component in gasoline blending or in petrochemicals. So these are all major uncertainties for people who are in the market. In terms of the overall volume and impact on the sort of price of oil, it's actually not, well, wars are not never particularly good for for sort of weaker markets, but overall, I think it's neutral because either it will be more products or more crude coming out from Russia.
Okay, and I mean sanctions again, not really in parallel. You have obviously the sanctions, which are obviously part of the geopolitical sort of puzzle. But again, that's not necessarily what's having an impact. It's rather sort of physical, actual disruption
Exactly. I
at the
mean, the
source.
sanctions have been really half-hearted all the way. With going back to Biden administration, I wrote a lot about it. I mean, these price caps, they never really worked. Biden administration, going back to India again and Narendra's arguments, it was Biden administration that actually encouraged India to buy Russian oil because they wanted oil to move.
Of course.
Only they wanted less revenues going to Russia. Now we have a different administration that has a whatever completely different policy at a whim. Which doesn't make any sense because obviously China has not been punished for buying Russian oil, and in the heart of Europe, you've got Czech Republic and Hungary that are buying Russian oil.
Yeah, and
They
also
haven't been
and I mean that and if they keep those stringent measures on a consumer like India, presumably that's going to push the price up eventually if India does start to comply, which isn't the case at the moment. Adi, thank you. Narendra, let's get your perspective. We know that India is going to manage all its relations very well with the US, with China, with Russia, whatever makes things tick. But, do you see a new era of warmer relations between India and China, given the recent meeting, given the shifting geopolitics and the Trump mechanics, if you like? Is there an actual tangible new trajectory or more of the same, do you think? We were seeing the trade blocs take shape, the WTO obviously being not dismissed, but again weakened because of all the tariff talk, new trade relationships being set up, expansion of BRICS, etc. So is this a new era of China-India relations, do you think?
Well, I think it'd be too early to call it a new era or to term the relationship as, to use the term like warmer. I mean, we have good relations with with China, a good working relationship, and we share this view that the world, we all should be working together for a multipolar world, which means that, countries like China, India, and Russia, they are all kind of, can be poles in their own right, and not only the United States. The era of United States being the only superpower on the planet is gone, and President Trump is working very, very hard to make sure that US is reduced to be just a small regional power somewhere in North America, which works very well for a majority of countries in the world. But that said, at the same time, where we disagree with China, China wants to see unipolar Asia. And we have problem with that. We want Asia also to be multipolar. India, a pole, Japan, a pole, Indonesia, a pole, Australia, a pole. And there we have differences with China. But today, the fact is that, we don't have any big fundamental, differences with China, except for the border dispute and except for the fact that they have a proxy called Pakistan, which keeps on exporting, terrorism and so on and so forth. So we have problems basically in these two areas, but border issue, the negotiations are going well. When it comes to Pakistan, we know it very well that they're not going to give up there soon because Pakistan is a very cheap and very reliable proxy for China, and it works well for China. So we know all those things, but we know that those realities, but we are trying to find a way so that we can have a deeper business relationship with China. We can work together, not only between India and China, but maybe also in third markets and third countries, in the third regions. And Russia has been a time-tested, reliable friend of India. As I said, that our strategy is not like this. There is no country we say we don't like you. We like all countries, and we find that China has a lot to offer to us, and we have a lot to offer to China. The same goes for Russia. But at the same time, when you look at philosophically, ideologically, politically, culturally, India is closer to the West. because we are a democracy, we are a free market. So we are closer to the United States, we are closer to Western Europe, closer to Australia, New Zealand, Japan, and these countries. So we will continue to work in that direction on the same time. But at the same time, we trust Russia, and we are building a new era of relationship with China. And we are quite confident it's going to work, because President Trump has kind of created problems for not for only India, for practically every country on the
Yeah,
planet.
I mean,
So
he
how do we
is.
deal with it? So that's why we come together and come
And
together and if you need to rejig, rework your strategies, by all means do that, because you have no other option.
yeah, absolutely. And economically, people can rejig, but I think the problem is the military dominance of the US continues to hold that threat over everybody, and that seems to be the problem in terms of medium term. Thanks, Narendra. There's our survey question for today. What will be the biggest driver of oil prices through to the end of the year? Those sort of four factors that are always watched by the market: geopolitics. We had a discussion yesterday on geopolitical risk, which seems to be all already accounted for across regions. Is it OPEC plus supply? Trade war still in flux, or China demand? So let's see what we get back on that. Peter, you started earlier, you mentioned the Fed will probably cut. I mean, I've been reading that it's kind of expected to definitely cut, at least by a quarter point later this month, and perhaps more. And let's make that assumption. And what kind of, how strong a liquidity boost do you think that'll give these already very, full throttle markets, gold and commodities, etc., and oil? Could we see oil propelled up to 80 in the fourth quarter, just on the back of a cut in Fed rates and that sort of liquidity drive?
Well, first off, I look at the Fed. They say it's about an 80% probability as far as baked in 25 basis point cut on the 16th and 17th of September. So let's assume that does happen. Is that what the market wants, or is that what the Treasury Secretary wants, being Scott Bessent? No. Scott Bessent's after 1.25% to 1.5% of cuts. Then we'll look at what the president's after. President's after 200 to 300 basis points of cuts. So there's the first
we're going to be
part.
back at 8% inflation with that, aren't we, very quickly?
Well, I can only tell you what he wants. Well, so the next part is, are we to see, if we do see that materialize, do we see another rate cut by the Fed in November? And that's, the market is saying yes, there's a good probability of that to happen. We've got some numbers to come out this week. We've got non-farm payrolls. And if they were to severely disappoint, they're released on Friday, then they're saying that it should be around that 73,000 handle. If it was to severely disappoint and say that came in at 20,000, then that would probably make Fed Chair Powell very concerned. And he may say, well, let's just sit on this one and see what happens as far as October's unemployment numbers, non-farm payroll. So the boat hasn't sailed yet. And that 20% chance of it not happening is always the counter argument. So what's going to happen if they do get rate cuts? I think it's naturally going to sink dollar further. I don't necessarily think it's been baked in yet. And if that was to happen, then US dollar would come off. I would suggest that you'd see gold to take an uplift, and precious metals. And it'd be a good sign for the stock market, because companies would be able to borrow cheaper, and with the expectation then of saying, hey, is Powell going to, I mean, only this time last week, or a bit longer, you had one of the governors sacked for mortgage fraud. So that's got to go through, I think, to the Supreme Court. And then is Fed
How long will Powell last? Yeah, is
Powell going to last till May? And that's another very delicate argument. Or is it going to be wrapped up, the Fed, and this is the talk on the street, to be wrapped up and sliced in under the Treasury? So again, there are many moving parts over leading up to Christmas, and whether that would be enough to spur oil to the upside, I don't know. I mean, I think you'd need something geopolitical to spur it to the upside, because you've got plenty of production, and the US is starting to produce larger numbers. So I think it's just very much a wait and see
Yeah, it looks like we're going to have to wait till
situation at the moment.
2026 for any real movement. Adi, back to you. Let's talk a bit about OPEC and particularly Gulf producers, and obviously Saudi leading the group, and OPEC plus, even if we want to expand beyond OPEC. Are we at a stage now where we've just forgotten about what they're going to do because it's very predictable? They've sort of laid out their plan, and there doesn't seem to be too much gossip or headlines about will OPEC do this, will OPEC do that. It's pretty set in stone, isn't it, for the next few months?
Well, it seems that way, but I would never underestimate OPEC. They do like to surprise, and they could surprise. But at the moment, I longer term, looking sort of medium to long term, i.e., 6 months or so, they are in a position where they're doing what they have to do. They really haven't got much choice but to fight for the market share when you have demand growing at only about 700,000 barrels in a year, and your competition is increasing supply by 1.5 million alone. What choice do you have? Just to let them and say, come on, you supply our customers. It's very unlikely to do that. So,
What's the
OPEC is
latest?
very.
Yeah, well, let me just interrupt you there, but ask you about Iran, because that's all gone very quiet, hasn't it, since June, July, obviously, after the fun and games, war games that we had there in the region. Very quiet on that front. Any indications, again, of even what's happening to Iranian oil on the water in the interim?
Absolutely, very good
China
point.
still taking less as it was before the summer?
It's nothing really. It's Donald Trump is talking very tough, but he's really not doing anything about Iranian oil. I think a political situation over Iran at the moment seems to suit everyone. Iran, they've went inwards. They know they're in a very difficult position. Donald Trump doesn't want any further war, and Israel would love to probably bomb Iran again, but they don't want to make Donald Trump be cross with them. So the whole situation's kind of reached some kind of plateau. Overall, I think for the oil, going back to sort of oil again, I think what's really most important at the moment is short term is the macro situation, as Peter just explained. I think is going to be the key. Longer term, I think is going to be this uncertainty regarding Donald Trump policies, because as we've seen, some of the more savvy players in the market, i.e. trading houses, have been actually doing rather badly this year. Gunvor just announced a drop in their profits of 70%. So what happens? Yeah, I mean, a lot
What
of people.
happened there?
Well, a lot of people assume that trading houses thrive on volatility. It's got to be some predictable volatility, not some dumb, totally unpredictable volatility. It's not a casino. Even in a casino, you've got some sort of strategy. But currently, it's very, very hard as Narendra said, it's very, very hard to operate in this absolutely mad environment where you don't know where the next decision is going to be made at a whim of a rogue president. So it's pretty hard to operate for everyone.
I guess the rest of the world has to find a way to fight back, perhaps a bit stronger. Narendra, let's close by going back to you and just give us your outlook for the Indian economy, economic growth numbers. If you can give us what you would project, for the end of this year, let's say, how will that GDP growth end up and the trajectory into next year? I mean, in the context of a bit of this uncertainty, tariff, I suppose uncertainty. 7% still on the agenda, or where are things looking these days?
Well, if you go by the latest data, that's for the last quarter, and GDP growth was 7.8%, which, given the circumstances, very impressive. And we are experiencing very good monsoon. As you know, that Indian economy gives a lot of importance to monsoon. Good monsoon means good GDP numbers. And the monsoon this year has been fantastic. But at the same time, the tariff, well, we may say whatever about Trump or the kind of, reworking the global geopolitical chessboard. But the fact remains that, tariffs are going to create problem for us, especially for small to medium, sector, which means where millions of people work. I mean, the people who work on diamonds and jewelry and leather and jackets and shoes and handicraft and so on and so forth. This is a sector that employs millions of people across the country. And they are also 80% of our exports in that segment, petroleum products, IT services separate, but I'm talking this manufacturing segment is almost 80%, so it's pretty high share. So therefore,
and no supply chain disruption yet, as far as you can
well,
tell.
I wouldn't say 100%. You can see some trouble. There are some clouds which have kind of started getting darker for some of the, in some of the area. There are some big buyers from the US. They have put things on hold. But we think that that's part of the American strategy to put pressure on India so that we sign the trade deal with them on the dotted line. The main issue between India and the United States and probably President Trump is he wants India to open up its agriculture sector and dairy sector, which employs 65% of Indian population. So Indian government is not going to do it. That's not going to happen. And President Trump, who doesn't understand even the United States, forget about India. So he doesn't understand that under no circumstances, no political party will go with it. We can't open up agriculture and dairy sector. So I think there's probably going to be no solution immediately. But my hope is that now that India is part of this effort to rework the global geopolitical chessboard with Russia getting more important, China getting more important, probably American State Department is going to intervene. We hope. We don't know. How powerful is the State Department? But if something happens, then we try to find a middle path in the sense that, probably tariff, if not 25%, may come down to maybe, 10% or something like that. And 25% will listen. We don't know. Even President Trump is predictable. But India, I just want to share with you, India and Indian economy, we're preparing economy so that we can deal with such a situation. So India is basically working long haul, preparing for it. And I think the resilience that we have in our economy, because our economy is still largely driven by domestic demand, I think we'll be able to deal with it.
Okay, thanks so much, Narendra. Thank you to Peter and Adi. There's the response. I mean, I think that'll change as the day goes through and we get more responses to that online. OPEC plus supply certainly wouldn't have been my vote. I'd say 3 or 4, but let's see where that goes. Thanks so much, gentlemen, for joining us today, and have a good remainder of the week ahead.
Thank
All
you.
the best.
Most welcome.
Bye, Adi. See you,
Thank you.
Narendra.
Thanks,
Bye,
everyone.
guys.
Bye.
Bye.